transcript. And so we'll go ahead and get started. And then other people, as they join us, can join the conversation. So today's discussion is going to involve pages 190 through 193 of the book. You can also find that probably in the master class. And it's entitled, "What Will the Next Crisis Look Like?" And it's kind of interesting as I'm reading this. It's interesting to note that Ben wrote this some time ago. I think he originally started the draft of this book probably close to 10 years ago, I believe. If not, it's been the last 8 years or so. And so, reading this section, as I recommend everybody do, you'll see almost how prophetic it is, in the sense that here he is. He's coming off of the 2008 Great Recession, writing this book, and he's now writing for the next financial crisis to come. And as he's describing it, of course, we are on the cusp of the very situation that he's describing here. So it's going to be kind of a fun conversation tonight to look at some of the key points that he is discussing, and then look at it not only from the perspective of foresight, which is what he was doing, but from the perspective of, hey, we're in the middle of this right now, and he's spot on in terms of what he foresaw, because we're seeing it. So anyway, let's jump into it. By doing that, again, just a couple of housekeeping things maybe before we get really into this. Number one, again, we love to see your smiling faces on these recordings, and feel free to keep your mic unmuted, unless, like me, you have a lot of background noise. Go ahead and mute it. I'll let you hear it since I'm doing a lot of talking. But anyway, feel free to just be informal in this conversation. The other thing I'm going to mention, and this is where I could use some feedback, is I'm going to be working with Carl Moore to see if there's a more convenient time to hold these meetings. We're going to record the technical discussions, obviously, so if you can't make it to those meetings on those nights that we record it, they'll obviously be available to you. But I've gotten a little bit of informal feedback that maybe we're meeting a little too early and that we might want to push it back an hour. And so if you have some strong feelings about that, let me know. I'm trying to accommodate as many people as possible, but just be aware that we may end up making an adjustment to the meeting time in the near future. When we do, we'll let you know when that is and when that starts. But if you do have some strong feelings one way or the other, then please let me know as well. You can comment, you can send me a chat message in school, reach out to me however is most convenient to you that way. So those are the two housekeeping things. Welcome, Toby. Glad you could join us. So we're talking about tonight, what will the next crisis look like? And it's kind of interesting because I think we're really on the cusp of the next crisis now. And you'll see what we mean as we get into the conversation tonight. So a couple of weeks ago, we kind of finished up the discussion with a question. And I'd like to get your thoughts on this. Feel free to kind of jump in informally. But the question is this: which would you rather have? Would you rather own all of Apple stock, or would you rather have all the gold in the world? And the question is why? Anybody want to refresh us on that, or make a comment if you've had a thought about that since then?
Yeah, I mean, I think having a business is kind of my preference because it can be agile. It can change depending on which way the economy goes, and it allows me to generate income, which I think is pretty significant on top of equity and all the other benefits that I might get from a business.
Okay. And that's a great point. Owning the business is good. I think the question, though, just to make sure that we're going back to the same frame of reference, was that the market cap, that's the word I'm looking for, the market cap for all of Apple stock is now worth more than all the gold in the world is worth or priced at. And so the question is, would you rather own all of the market cap value of Apple stock, or would you rather own all the gold in the world? How would your answer be different, Stephen, if that's the way the question was put to you?
I'm not sure. I mean, what's the utility of each?
Okay. I think the implication is this. Apple, even though it's a company and there's underlying assets and all that kind of stuff, the stock value can go to zero. As implied in all stocks, right? But when you have gold, there's intrinsic value in gold. And so the value or the price of gold can never really go to zero. I doubt that Apple could ever really go to zero either, but in theory it could. It could go bankrupt. Companies go bankrupt, and so they can go to zero. So to say Apple, like the Titanic, never sink, is probably a rather arrogant thing to say. But gold in 6,000 years, gold has never gone to zero, and it has intrinsic value in and of itself. And so even though the market cap of Apple is higher than the total of all the price of gold in the world, so in other words, if you had a Fort Knox of your very own and put all the gold in the world in it, it wouldn't be as much as the market cap of Apple. But the question is which would you rather have? Anybody have any other thoughts on that as I segue into tonight? Okay, well, let's go to the next question. Ben is being interviewed. And so this next interview is called, "What will the next crisis look like?" And so the interviewer says, so we've established that our bank issued debt is a Ponzi scheme, okay? And it will inevitably collapse. And so he's asking, but what will that collapse look like? And how will it affect the average citizen? We are kind of the average citizens at this point. We all would hope to rise above that, but right now we probably are. And so how would that affect us compared to the previous financial crisis? And I imagine most of us were alive during the Great Recession of 2008, and it lasted until about 2010 or 11. And so we can kind of remember some things then. But Ben starts by answering that question, and I want to get your comments on this if anybody has some thoughts. He says the common theme from crisis to crisis is that they all get bigger than the previous. Okay, trying to draw that linear line there with my hand, and I can't do it in reverse. But anyway, each crisis is going to be consistently bigger than the last one. And so when you got Fed Chairman Bernard Bernanke telling people in, 2009, this is the biggest financial crisis, and it's even bigger than the Great Depression. In fact, he said it was the biggest financial crisis in the history of the world. Where does that go in your mind in terms of what he was saying back then, and how does that reflect to the one we're on the cusp of now? Anybody have any thoughts? Don't be shy. Turn on your cameras and take yourself off of mute. Jump in.
Well, I mean, my first thought is we don't know, exactly how the crisis will manifest, because it's really complex. The way I see these failures is they're happening at different layers of society, and so they just confound each other. I think a global financial crisis, to me, like the epitome of one, would really look like people, like maybe either internal government fighting against what the next currency will look like, because the degree to which there's internal fighting is a huge part of the issue. And so it continues to have a polarizing effect. And it's a question of, to what degree does the media play a role in this as well? Because we're also seeing a massive shift between legacy media, but also the ability of modern media to cancel people. So it's kind of a question of, excuse me, yeah, at what levels of the empire do we see kind of turmoil, and the desire for a lot of us to return to some type of stable, currency. But I think the more problems we have, the more people will actually turn to even seemingly risky assets like digital assets, just for the sake of getting away from this collapsing mega inflationary currency. And I think Ben points out the degree to which Peter Schiff has been yelling from the rooftops, and lots of different folks. I mean, I think Peter Schiff is just one out of many that knows this game of musical chairs has to end, but it's really a question of at what level, and yeah, what that ultimately means for us navigating our financial future.
Stephen, I'm glad you said what you said. You mentioned a number of key points there that I think are very key. In fact, Ben speaks to almost all of those in this particular section. I don't know if you read the section ahead of time or not. You did your homework, but you nailed it. And I'll just mention a couple points, and then we'll segue back into them a little bit later. But he mentioned wars and conflict, and how that is a cover for who's going to control how the currency is being used. In other words, the US military is actually a branch of the Federal Reserve Bank. So he mentions that, and you did too. And then he also mentions the media and how they're complicit in all of this, and how they're used to help promote the narratives that the Federal Reserve Bank and the central banks around the world are using to, basically, how does it work? The magician says, watch the hand over here while I do this over here. Try to get that all on the screen. But basically, that's what the media's role is to do, is to obscure the facts. And so, and you mentioned a couple of other things there, and I think we're going to talk about them in some depth. So that was a great overview statement of what's on these pages that Stephen just made. And so let's go back to the original question for a second, and Stephen did a good job addressing this as well, and that is why as we move from one financial crisis to the next, do they get worse and worse and worse? And in the simplistic bottom line is that every time we have one, ever since we had the market reaction to Nixon taking us off the gold standard and closing the gold window back in 1971, is we've had now bubbles. Before we had business cycles, every 7 years, or every Shemitah, for our Jewish friends, we had a boom and bust cycle, and the cycle was allowed to work itself out. In other words, there are natural ways for there to be a natural healing of the economy. And so it gets healthy, and then about every 7 years or so, different things would set in, and it would be unhealthy. It would have a fever, and it would burn itself out, and then it would start all over again and regain its health. And it was all very natural and automatic. You could almost predict everything by it. Literally, with the Jewish holiday, the Shemitah, it pretty much followed that kind of a cycle. And
so Mark, do you think then the Fed and what it does creates these false signals
Absolutely.
that
Absolutely.
continue these boom and bust cycles because it's not reading the market properly, and it's trying to do all kinds of centralized operations that just cannot account for the complexity of the market. That's what
we
it
no
seems to me.
longer have those naturally occurring boom and bust cycles. We now have bubbles, and you're absolutely correct. Bubbles are manipulated by the Fed. In fact, how does he say it in here? Ben says it on page 190. He says the Fed does not let the economy correct itself and recover, letting assets and resources be allocated to the places where they're best served. The market can take care of itself, but they want to manipulate the market. Now, obviously, I'm a believer in G.W. Griffith's book, the creature from Jekyll Island. So I'm just going to say it. The Fed is playing a zero-sum game, and it's how do we get all the marbles and leave everybody with none? And they've been doing it since before 1913. The Fed was created in 1913, just a little over 100 years ago. But they were setting this up for a good 20 years before that. And so they finally accomplished their objective by establishing the Fed. In the history of the United States, we've gone through 3 periods of time in the history of the United States when we had a central bank. We didn't have a central bank the whole time up until 1913. So from 1787, when we finally got the Constitution and started our United States government, we had a central bank only 3 times. And the first time, I think it lasted, 10 or 20 years. I don't remember. The second time, it was under Jackson. It didn't last, I think, very long at all. Jackson was very anti-central bank. Quite frankly, he's probably turning in his grave because they've got his face on a $20 bill. He was not that kind of guy. Hamilton, yes, that's why he's on the $10 bill. But Jackson, no. And Jackson wasn't the greatest president, but that was one of the things he was really strong on. He was very anti-central bank. He got rid of it the second time around, and we didn't have one from Jackson until 1913. And obviously we survived without one for probably the better part of 70 or 80 years. And now all of a sudden we can't seem to live without it, right? That's what they want us to believe. Again, I'm just going to preface my comment after the fact that I am definitely an Austrian school of economics, and there should be no central bank. And quite frankly, not regulations either, or very few regulations. That's where I probably go a little bit more to Chicago, but not very far towards Chicago. I'm still Austrian on that. But nevertheless, and Austrian, of course, is where your economic thought for libertarians comes from. Well, but anyway, where was I going? The Fed doesn't let the economy correct itself, is what I was saying, and so they try to manipulate things to keep inflation down, as they say, keep the employment rate up. There's a third objective. Toby, help me there if you can think of it. But anyway, in order to do this, and we saw it with the crisis of 2008, in order to fix the problem, according to the Fed, you inject the economy with more cash. Okay, that's called quantitative easing. That's what they named it this time around. Every bubble we've had since 1913, and I'll go that far back, call them all bubbles, has been resolved with a Band-Aid called quantitative easing. Okay, they've infused more cash into the system. It's obviously inflationary, and it's called propping it up. As you read about in The Creature from Jekyll Island, the name of the Fed game is bailout. Okay, so they've been bailing those banks and institutions out for decades. It's not just the last crisis. The last crisis, we had the most institutions bailed out that were too big to fail, but they've been bailing people out that were too big to fail since all the way back in the Great Depression and prior to that. It's just that it hasn't hit the headlines quite the way they started hitting the headlines in the mid-1970s, when people were more aware of the game the Fed was up to, and now the Fed has to walk on eggshells to defend their action, right? Because that's what they're doing. It's all about bailing companies out, infusing them with cash, putting cash into the economy, and propping things up. And it's just an economic band-aid. Let's see. Ben says, essentially, instead, the Fed invariably stimulates the economy, injecting more money into the very place that shouldn't have had it in the first place, right? Because the economy is trying to say, you big banks that you think are too big to fail, you guys, you're the ones that need to fail. Those are the ones that need to go down like the dinosaurs and allow the Darwinian evolution of the fittest work themselves out. And so anyway, that's what happens there. Let's see. So the problem continues to be exacerbated. It continues to build, and the inherent risk becomes more fundamentally systematic with each bailout or stimulus package. Okay, so I'm doing a lot of talking and reading here, so some of you guys kind of jump in and tell us what you think here. Come on, Toby, I know you got something to say. Putting you on the spot.
Hey, Mark.
Hey, there he is.
I wanted to jump on, but I had to finish sending an email.
Oh, okay. So let me inject another thought as you guys are gathering yours and finish the paragraph that Ben wrote here. He said, basically, now see how this, again, this was written 8 or 10 years ago. See how it applies today. I mean, this is ripped out of the headlines. He says, now the Fed has backed itself into a corner with artificially low interest rates it can never raise without blowing up the entire economy and itself in the process. What's happening? They're raising interest rates. And what's going on right now?
Something's going to give.
Yep. Oh, it's already started.
Or
the market has lost $58 trillion in value this year. $58 trillion. Back in Black Monday in 1987, yours truly here was just a lowly senior accountant working for Ernst & Winnie, which back now today it's called Ernst & Young. But I was working for what was then the Big 8, which is now the Big 4, which I call the Final 4. But I was working for Ernst & Winnie, and one of our clients was Bank of America. And so I had been assigned to go down to San Francisco, which is the headquarters of Bank of America, and help them work through, as a consultant, some of their IT problems with respect to their trust accounting system, their pension accounting system. And so I happened to be on what was called Wall Street West on Black Monday, 1987. The stock market on the Friday before teetered, and everybody was nervous and everybody knew something was wrong. And so on Black Monday, before the market even had much of a chance to open, me and a bunch of guys said, you know what? Something's going to happen this morning. Let's go down to the stock market building, Wall Street West, and let's go see what happens. And I was literally standing on the steps of the floor, trading floor, as we watched Black Monday unfold before our eyes. I was watching the ticker tape go across the front of the building as everything inside came crashing down. Okay, and it lost, 508 points. It lost 25% of its value that day, a little over 25%. Billions.
You know what the saddest part of this, Mark, actually is, because sometimes, thinking about these scenarios, it's hard to get like a real sense of the kind of loss that occurs. But imagine the number of pension funds currently wrapped up in the market that has lost significant value. And again, it's the road to these issues is because you have a central banking, we'll call it cartel, because that's the way that Ben refers to them,
Yeah.
being able to manipulate and maintain legislation to a degree that it really prevents smaller pension funds from taking advantage of the real inefficiencies in the market and be secure, and they're kind of forced into these positions a lot of times. So I think that's really the shocking element is the degree to which lots of families will just lose out, because of that.
And that was the unstated statement you just stated, which is great. I mean, and we watched people lose their retirements before our very eyes. People's lives were ruined, at that point. And, we saw it as some kind of historic thing that we were excited to be a witness to. But you're absolutely right. In the years that have ensued, and I think back on that experience, it was tragic. But that's not the only tragic experience, is my point. And back then, the stock market lost, 25%. It was trading right above about 2,200, and it lost 508 points, right? And it's an amazing thing to see. I mean, that would be tantamount today to seeing the stock market lose roughly 8,000 points in one day. That was the equivalent of what we watched, that meltdown in one morning. If you were to sit down and watch the stock market today, tomorrow morning it opens up and you were to watch it melt down by 8,000 points. That's what we watched.
Wow.
Okay, that would be a bloodbath when you think about it. And yet it was not as big as what we're seeing sequentially after that. So every bubble that has come since that day of Black Monday, each bubble has become bigger and bigger and bigger in terms of its impact and ramifications. And you might not see the stock market lose 25% in a day like we did, but in 2008, we saw the stock market lose almost 60%, just the same, over an 18-month period, not in a single day, but an 18-month period. This year, we watched the stock markets lose $58 trillion.
Wow. Yeah, one of the frames that I, at least try to be aware of is kind of look at, I believe it's 18 different measures that Ray Dalio looks at in terms of the global economic, machinations, and the degree to which we've reached tipping points on several of those indicators. I think that's the way I think about the catalysts that end up blowing up, these ascending bubbles, is somewhere along those lines. Because, we could go through a very small, checklist of military war versus technological war, which we're also seeing, economic wars. These are what we're seeing quite frequently. And I think, a catalyst could very well be an existential catastrophe, even, not much, not unlike the pandemic, but at different levels, whether that's, food production, et cetera, et cetera. So take your pick, and there could be any number of catalysts here. Anyway, that's just another way that I tend to think about it, because ultimately I can never make a good prediction, and it, to continue to kind of stay aware that playing the prediction game can be pretty futile. But I think being aware of different degrees of risk across again, multiple levels is just at least a broad stroke way. Because how else do you maintain sanity? You could pick any number of rabbit holes to chase down.
Sure. Well, and I think you bring up a good point too, Stephen, in that, and I'm going to give you some encouragement here in terms of your, crystal ball gazing. And that is that, history, and a lot of people who, talk about history, but, they say history has a way of repeating itself. Better said, if you don't learn the lessons of history, you're doomed to repeat it. And so when you look at something as simple and basic as the Fed and trying to manipulate the economy towards for their ends, it's pretty easy to say, guess what? This is what the Fed did here, and this is what happened. And this is what the Fed did here, and this is what happened. So if the Fed did that again, what's going to happen? The same thing. And so it's really not that hard to look through your crystal ball, watch the Fed doing what it's doing, even though they're trying to play all these magical watch the hand over here and watch the hand over here while this is all going on down here. You still can, that you can look past the hand and look at what's going on and see what's happening and know that it's going to happen because we've got enough history, 100 years plus, to look at it and say, guys, you're not fooling anybody. It's like the magician who does the silly trick, and everybody is, that's uneducated is going ooh and ah, and everybody else is going, oh brother, you're insulting my intelligence again.
Yeah, and I think it's always timely for the influencers that can come out and articulate these things and kind of shatter the paradigm in people's minds, and provide alternate paths. And yeah, I mean, the degree to which competing media platforms prevent those kinds of people from being canceled, then I think that it becomes common culture, and then we start making decisions differently. Like I'll give a really good example of something that I was like, how would the Fed, again, whatever that conglomerate of committees and oligarchs and whatnot, if we started working with other countries that were willing to export their goods and services, and they were willing to say, hey, we're just going to do it through this electronic currency. We're not going to use dollars anymore. We're just going to use this specific thing. That would kind of be a significant, a significant movement. And I think something like that has to happen. And I just can't figure out what the facilitation of that becomes.
Blockchain.
But well, yeah. But I mean, as far as the logistical details, or
Sure.
a country willing to sort of forego the political veil of relationship to say, hey, this really is much more efficient, and we'd rather do business like this. Anyways.
Well,
yeah,
it's interesting. The countries that don't have central banks in the sense that they are participating in the central banking system, it's basically your first world countries, maybe a smattering of second world countries, but the ones that are really on the outs that would be willing to consider what you're talking about, Stephen, and I think it is the solution, I think you're spot on, is an effort to work with third world countries where they're not dependent upon the IMF and the World Bank for bailouts. In other words, they've got to settle down and be dependent upon the strengths of their own economies, and then work as partners with those that are willing to work together using some kind of blockchain technology that essentially securitizes or is security and basically acts as a legal escrow for the things that have inhibited trade, and then just bypass the central banking system altogether.
Yeah, I mean,
I think blockchain is the key to making that happen.
Yeah, technologically, it's already there. I think it's because as I'm listening to you right now, I'm realizing again the level of entrepreneurship, because these digital currencies right now, I think there's a glutton of cash, investor cash, chasing too few projects, like real projects, solid engineering teams. And I think, there's this sort of framework and architecture already being built, and it's a question of rolling out.
It's not so much the cryptocurrencies themselves. I'm not talking so much about cryptocurrencies.
No. I mean,
it's the underlying technology.
Yeah, correct. Like identity data is a huge part of this. Whereas it used to be, passports and all these different things. Whereas the data function is going to be technological based, and what that means for our ability to travel and do commerce and all of those things and be protected. Again, thinking about existential risk, cybersecurity is top of the list right now. I mean,
Mhm.
you know, in a matter of weeks, you could get your Twitter hacked, and then your email, and then your you know, bank accounts. It's more and more frequent, and that's a question too. There's certainly market demand for a technological blockchain-based solution to preserve your identity, and I think from that place, all the other things start to stem: economic movement, et cetera.
I think you're spot on. So let's go back and identify some more of the bad guys in this thing so that we can kind of recognize and come to a conclusion that we've already come to, which Stephen has well articulated, and that is that there are technologies that we can use to bypass the bad guys. And quite frankly, I think they're so stinking scared of the little guy like us, who are very entrepreneurial, and the libertarian thinker, who essentially can think beyond boundaries and beyond, you know, regulations, and put things into place that, you know, we don't need Big Brother, you know, looking over our shoulder. And here's some things that he writes about, again, 8-10 years ago, that we're confronting today. First of all, just to go back, and I'll read a paragraph that introduces what Stephen has already mentioned. So good job, Stephen. He says, you know, he's talking about again, the Fed and the system, these oligarchs are doing everything they can to protect this house of cards. Okay, and it's not just printing money. Okay, it's also strategic wars. We have some strategic wars going on right now. It's strategic wars to prevent people from ditching certain currencies. Okay, so in other words, we're being manipulated into which currencies we use and how and when. So, you know, that'd be interesting to take Russia, Ukraine apart, for example, and look at our involvement and our commitment to Ukraine in this, and ask the question, are we being manipulated into ditching certain currencies and embracing others? Okay, can we get beyond the bumper sticker politics of the Ukraine-Russia conflict and see what it is we're being manipulated into doing? Be interesting. I don't know that I could articulate, but I can certainly tell you about some other things that would make you raise your eyebrows about Ukraine. And it has nothing to do with Putin. But anyway, he goes on to say, it's a comprehensive effort. Loosely speaking, the US is the military arm of the Federal Reserve to enforce its policies globally. Okay, that's
inform us, Mark. Tell us what you feel about Ukraine. Talk to us.
Well, I don't know what to make of it, but I'm just going to give you some data points. If you can go back into your ancient history, okay, go back into ancient history while Trump was president. All right, what was a certain son of a former vice president doing in Ukraine?
Right.
Okay. What did that former vice president have to do in Ukraine himself? What was Obama doing messaging people in Ukraine at that point in time? And what did the Clinton Foundation have going on in Ukraine? And unless you think I'm thinking about one side of the aisle, what did Mitt Romney's key campaign manager have to do with Ukraine? They all had dealings in Ukraine, financial dealings, big financial dealings. And so now all of a sudden we've got Putin invading Ukraine, and these same people are the rallying cry of why we have to support Ukraine against the Russians. How about another data point? The fact that we had our own version of a Cuban Missile Crisis going on in Ukraine, where we had weapons, bioweapons of mass destruction pointed at Russia from the Ukraine. And those were our laboratories, by the way, not the Chinese Wuhan laboratory. That was our lab that Putin went in and destroyed. And yet we have certain people crying, oh my goodness, we've got to defend our interests in Ukraine. Now, I'm not an advocate for Russia or Putin. I really don't know what to make of the situation because I don't feel like we're getting the whole story. But, you know, it's interesting. because there's this bumper sticker politics which says Putin bad, Ukraine good, we got to go defend Ukraine. Okay, and maybe that's true. I don't know. I don't know if Zelensky is a good guy or a bad guy. And quite frankly, I've heard some interesting things about Putin that I don't even know if he's such a bad guy or a good guy anymore. I don't know what to make of it. So I look at these data points and I'm going, follow the money, follow who's got the interests, and it boils down to certain families, Biden's, Clinton's, Romney's. And I'm going, what the heck is going on over there? That's all I can say about it. And if they have the interests in there, then how does that fit with our central bank? Strategic wars to what? Ditch certain currencies. So I don't know what your thoughts are, guys. Feel free to jump in. Tell me where I'm up in the night. Tell me where I'm wrong. I don't know.
No, I think you're on point. I mean, it still just comes down to bottom line. We just don't know what the real story is. Yeah.
You know, and that brings up Stephen's other point, which is the media is contracted to obfuscate the issues. And that's why I'm looking at this and going, I have been reading the media between the lines for 40 years. I've known the media was corrupt for 40 years. That's, you know, virtually my whole adult life. And so I've been able to develop an ability to read between the lines and look at what they're not saying about certain issues and come up with my own headlines. And many times, most of the time, I'm spot on. I can read the issues right and tell what's really going on by what's not being said.
That's interesting, Mark, because I tend to go almost in the opposite direction, meaning I try to immerse myself into principles of thinking and recognizing that a huge element of this is we need to go back to our own ability to sense make and to get in touch with, you know, what are we here to do as human beings to get out of this sort of matrix trap, because you can be spun up in all kinds of directions. And I think one thing the media has mastered is how to I would say elicit the dark side of personality that creates these sort of polarizing experiences. Yeah, I mean, and it's integrated with algorithmic technology, so it's pretty I don't want to, well, anyway, and so I need to like get away from the media to try to recognize like, okay, what's most important, and that way when I come back to it, I'm not swept up by the tendency, you know.
Yeah, and you're absolutely correct. I've done the same thing. I failed to mention that as a part of my analysis in answering the question about Ukraine specifically. And so, yes, I do the same thing. It's very principle driven. It's very based on things that, you know, natural laws that never change, no matter what, you know, people might do to manipulate things and what. But the point is that with Ukraine, and I think this is the direction I'm heading, I think we're finally reaching a conflict where there is no good guy. Both sides are bad.
Well, they both have their own agendas.
Yeah.
Everybody has their own agenda.
Where we're not wearing the white hats. We're not the good guys in this. We're definitely supporting the bad guys. Now, you know, and again, when I talk about good guys and bad guys, you know, if we get involved in that conflict, I think the chances are very high that we will. Whether it's, you know, with conventional troops over there or, you know, nuclear weapons. You know, those conventional troops, those boys and girls that go over there, they are not the bad guys. You know, they're going over there. Their hearts are pure. They think they're defending freedom. They think they're defending, you know, Ukrainians, and in essence, they are. But I'm talking about the higher ups.
Oh yeah, I mean,
it's the
Clintons,
the
same,
the Romneys.
right?
You know,
when we say China, we never mean the people
Chinese
of China.
people.
It's,
That's right.
It's
We
the
don't mean-
government. It's the
Yes.
communist
That's right.
Chinese party. Yeah.
But you know, even in this case, though, in history, we've had even the sense where we've been kind of the good guys, even, you know, up at the top, so to speak. And yet, you know, and the guys on the ground, the boots on the ground are the good guys. But in this case, you know, I don't know if we're going to have boots on the ground, probably will, but it's very clear to me that something is very much amiss. And that's what I was trying to point out, that it's very hard to see because, you know, again, people are watching and listening to the bumper sticker politics. They're reading the bumper sticker and saying, I agree or disagree. They're watching the media and saying, I agree or disagree. And we're being spoon-fed what we're supposed to believe. And I'm going, I don't think so.
Yeah.
There's something wrong. You know, something doesn't smell good.
I sort of got a hint of that because I can't remember his name, the leader of Ukraine right now, but
Zelensky,
to know his background, to say, and from what they say, he came from being a stand-up comedian to running for election. The guy doesn't seem like he just came back from from being a stand-up comedian.
Who was it? That
No,
movie?
he's a hard nose, and I don't know if it's true, but he's been trained.
Yes, he's got handlers and he's been trained. There's no question about it.
There's no question about that. You can see it, right?
My guess is his handlers are, you know, affiliates of Biden, Clinton, and Romney,
well,
among others.
No question. He's been trained. I think he came through the U.S. military system. He's been trained.
Yeah.
Because
what was the movie that Robin Williams played, the stand-up comic that ran for president, got elected? What was that movie? I don't remember the name of the movie either. I can see the one sheet on it, but I can't remember the name of the movie. Anyway, yeah, your point's very well taken. Well, let's go on because we're now getting to the essence of who's in control. And Ben writes about this. He says you know, after talking about the military being the enforcement arm of the Federal Reserve, he said that's a whole separate geopolitical discussion that I'm not going to dive into at this moment. But it's not just a matter of printing money. Again, he emphasizes that again, and then he says it's a matter of having enforcers to make sure that everything doesn't fall apart. So we're talking about the strategic wars. We're talking about the media. We're talking about certain politicians who are put in place to make sure all that happens. And then he goes and says this. Now, watch the goosebumps come up on your arms. Okay, he says, again, the power is global. It's oligarchical. What does that make you think of?
Russia.
Russia? Okay. How about something bigger than Russia? How about something bigger than China? Have you guys heard anything about Agenda 2030 in the World Economic Forum? Speak to that, Toby. They've had several agendas. These are the oligarchs or the elite of all the countries that are a part of that World Economic Forum. And they come together and they plan out how the world is going to go. And they make no secret of it. In fact, don't do it now, but go out and Google World Economic Forum. Okay, and what's his name? Schwab?
Klaus Schwab.
Klaus Schwab is the
Looks
head
like
of that.
a Russian spy.
Yep.
Looks like a James Bond villain.
Yeah, he looks
Sounds
like a James
one
Bond villain. And basically, if you go to their webpage, and don't do it now, but if you go to their webpage and look at it, what does it say? By 2030, you will own nothing and you'll be happy. I mean, they make no secret of this. Their goal is complete and total world domination and a group of slaves by 2030. That's 7 more years effective. Now, will they win?
Yeah, I wonder
doubt
where Peter Thiel falls into these conversations.
I'll tell you what, I don't know about Peter Thiel personally. I saw something with his headline just today, I think it was. But I'll tell you one who is involved, Bill Gates. He makes no secret of it.
Yeah, absolutely.
You know, Bill Gates is definitely there.
Buying up the farmland. They want to control our food, our money, everything.
Yeah. So anyway, you know, look at that statement that Ben makes and then think World Economic Forum and you're going, oh my goodness, I get it. Okay. And it goes even further. He says what it means is, oh, wait a second. After oligarchical, he goes, things aren't just going to fall apart because they look bad. the most powerful force in the world is fighting to maintain it. And so we are talking about the oligarchs and the elite of the world, whether they're in the World Economic Forum or something else. Okay, I tend to think it's Klaus Schwab, but you know, in all of his ilk, he's been outed. He makes George Soros look like an amateur. I think George Soros is part of it, probably. He's got his, you know, he's a Klaus Schwab minion when it comes right down to it. But anyway, you know, Ben concludes that it's impossible to predict exactly when everything's going to blow up. And yet I think we're now on the cusp of watching that happen right in front of our faces right now. He goes on to talk about, this was a great statement. Okay, let's see if you guys can pick up on this. He said there were a lot of competent financial people who understood this stuff in 2008, 2009, but they have since lost because they continued to bet on the fundamentals. We're talking about the fundamentals in investing in this case, whether it be business, as Stephen has mentioned, or whether it be, you know, the markets. But they focused on the fundamentals. They lost everything because of it. And then he makes the statements, and the fundamentals have been buried by manipulation for the past 10 years. And then he goes, hell, really, it's been for the last 50, going back to 1971. That's when Nixon took us off the gold standard, right? And I'll say, hell, it goes back to 1913, since the Federal Reserve has been practicing manipulating things since day one. Okay. And so, you know, you could say it's going back for 100 years. But then he says a very, very interesting statement. He says, timing is everything in finance. And I think that's going to be the bulk of the conversation. Just a second, I'm going to mean. Okay. So timing is everything in finance. But what happens when you strip the fundamentals off of investing, or, you know, starting businesses and things like that? You strip those fundamentals off, and now you're working with manipulation. What does that look like?
Well, one thing it makes me think of, right, is a degradation in our economy when it becomes more difficult, let's say, to start a business or to actually do commerce. When you have too many laws, and a lot of these laws don't even make sense, you start to go backwards. So that's one way that I think about that.
Mm-hmm. Okay. And that's a very good point. Let me bring up another one here. He alludes to it. He talks about the people that one of the fundamentals was to short treasuries. Okay. And people who shorted treasuries ended up losing everything. But that was a fundamental thing. Other fundamentals might be, invest in blue chip stocks. You know, invest in the old standby blue chip stocks because your money's gonna be safe in there. They typically don't go down by much. They always pay a dividend, you know, that kind of stuff. And yet people, you know, moved their money into those places and lost everything.
S&P 500, right?
The S&P 500. Okay, so that's the thing that we're talking about here. They went to fundamentals. They went to gold. Okay, that's a fundamental. Get out of the stock market. You go to gold. What happened with gold? Okay, the people who got into gold lost everything again. Okay, so the question is why? Why do those fundamentals don't work anymore? And of course, it's because the markets, the gold market, the bond market, certain blue chip stock markets, all got manipulated. And so in the process of getting manipulated, they lost everything. Now there's a term for this that somebody has come up with. I don't know if she came up with it on her own, but how many of you guys know Nomi Prinz? Big stock market guru. She actually was working in the market as an analyst, I think it was, or kind of a computer analyst when she was 19 years old. And she's now a PhD, Dr. Nomi Prinz. She spent 15 years on Wall Street developing software for, predicting stocks and things like that. Now she's out on her own, but she's coined the term the great distortion. Meaning that if you continue to focus on the fundamentals with all the manipulation that's going on, there's going to be a widening gap as a result, because the fundamentals are now being manipulated to the point where you can't use them or benefit from them anymore. And yet there is a place out there where the smart money has discovered is being propped up or being or going to be the new fundamentals, I guess, the new horizon. And so you don't have to agree with her on what stocks to buy. I'm not talking about that, although I think she makes some good calls. But it's the concept, because I've watched other people now coming out, and other prognosticators and newsletter people and people who are analyzing the market and talking about what's going on in the market. And they're all referring to this distortion, whether they call it the distortion or describe it as something similar. There's this distortion that they're predicting that the haves, the rich will get richer and the poor will get poorer, because you cannot rely on the fundamentals anymore. And so you'll find a new class of poor, and those who can profit from the distortion will be the nouveau rich. And so it's a matter of now understanding what that distortion is, how to take advantage of it and profit by it. You don't have to agree with it, but you're going to have to profit by it. It reminds me a long time ago, back when I was just a young man, I was probably in my early 20s, so it's been about 40 years ago. I was in a meeting, and a wise gentleman was talking in the meeting, and he basically said, ladies and gentlemen, I'm paraphrasing, but he said, ladies and gentlemen, we are moving into a global economy. Keep in mind, this is 1982, right? So we were just coming off of an industrial age and moving into the information age, okay? We were less than 6 years away from when Steve Jobs and Steve Wozniak invented the personal computer, okay? That's how far back that was. Computers were still something that took up entire rooms. Some of you, I don't know, Frenchie, if you're old enough to remember that.
Yeah. I used to go to the classroom with my friend of mine, and why he punched the cards in the
Fortran cards. Yep. Fortran cards.
And the big machine took up the whole room.
Yep.
And everything that does, we can do on our phone now. So
yeah, I'll tell you a side story about that just to make you laugh, and then I'll come back to my point. The side story is that I automated my first accounting system in 1983. Okay, so we're talking literally 6 years after the personal computer was effectively invented. Apple was only 6 years old. Microsoft had not even invented DOS yet.
Right.
Okay, I think they'd invented it, but it wasn't that ubiquitous. We were still saving everything either with a cassette tape, because no computers had hard drive,
right.
long-term memory hard drive. You
That's
had to
correct.
save everything on a computer tape, a cassette tape, or a 5 1/4 inch floppy disk.
It wasn't 5 1/4. They had, remember, you had the big 12-inch. You had the
and you had the 12-inch, and that was what I was just going to mention. So I automated my first accounting system. I mean, we literally moved it from a bookkeeper who was keeping things on pencil and paper onto a computer. Okay, and I automated 4 companies that were associated with my employer, and I did exactly that. I had a tower, okay, that was about as tall as my desk, and it took the 10 or 12 inch, I don't remember how wide, but it took the big floppy disk,
Right.
for backup. And that's what I was backing up on with those 10-inch floppy disks.
Yeah.
And the tower had the capacity to process, get this, guys, you'll be super excited about this, 10 megs. 10 megs.
Yep. That was big back then.
That was huge.
That was big.
And so here I am. I'm just this little accountant. Heck, I haven't even graduated from college yet in accounting, and I'm automating this system. I put it, and I'm sitting there so happy with 10 megs, and I'm going, I don't know how I could possibly ever fill up 10 megs.
Right.
And
Yeah.
so my dad comes in, he's an accountant, right? He's been working over at another company in town as an accountant. And of course, he's got, a bunch of years of experience on me. And he goes, you got to understand, Mark, only 5 years ago, I finished automating our accounting system. It was an engineering consulting firm. You probably heard of it, CH2ML. And anyway, he'd finished automating their system. He goes, our system fills up the whole room and I have 2 megs.
Yes, 2 meg.
So
That's
he
funny.
was super excited to see me with 10 megs, and it was in a tower that sat next to my desk,
Right.
that was as tall as my desk. And so anyway, we were laughing and joking all about that. And of course, I've laughed and joked about that ever since. 40 years ago, I had 10 megs and I was super excited about it. But anyway, at that same point in time, I'm listening to this wise guy in the room, and he says, we are moving into a global economy. He goes, you don't have to like it, but like it or not, we're moving into a global economy. And he said, those who are prepared to function and thrive in a global economy will thrive in a global economy. And those who are not, won't. And, and it's interesting because, from my own career standpoint, it wasn't a couple more years later, I literally was making some career choices and career changes that led me and took my seemingly boring accounting career into a jet-setting global career. And I literally have had expat assignments in accounting in Europe and South America and Canada and all over the place.
Nice.
And I've traveled internationally thanks to the fact that I took that concept. And I wasn't particularly excited about globalization. I'm more of a national guy, America first kind of guy. And so I wasn't particularly pleased with it, but I embraced it enough to actually turn it into, I guess I was pragmatic enough to turn it into a good career. But, that's where we're going today, in many respects, where this great distortion is happening, this distortion between the fundamentals that have proven successful in the past, which we can hang our hats on, and now the fact that it's being manipulated. And so we don't have to like it. I don't like it, but it's happening. And so we can either choose to be pragmatic enough to embrace it and say, all right, it's what is now, it's the new normal, to use an overused phrase, and embrace it so that you can profit from it.
Right.
And of
Well,
course,
I think it's growing pains, a lot of what we're going through right now.
it could be growing pains. Good
yeah,
point. Good
Yeah,
point.
whether we like it or not, it's just happening. I mean, well, I knew it back then because, like you said, back when I told you before, my career was architecture,
Mhm.
and I wasn't even thinking about computers. But I know my best friend, when I was in college, he was a computer. That was his major, and I used to go around with him. And when he went to the computer room, I would go and wait for him and watch him go through his process. So I got into it sort of bi-directional, because when I got into architecture, they started doing CAD, computer-aided design.
Mhm.
So
Mhm.
then that's when I started getting into it. When we bought, we were like one of the first small architecture firms to have a CAD system, where we bought it from Radio Shack. And like you said, a 10 meg Radio Shack computer,
Mhm.
Because before that we had that green diode screen computer where you put
Mhm.
10-inch disk in. We were doing like you said, off of DOS, because I had learned DOS in school from him, watching what he was doing. And then I think I might have taken a course or something in DOS, so I learned it.
Mhm.
But that's how I got into it. And then when I sort of got tired of architecture and I wanted to do something different. And then that's when I went to DeVry and got into the computer-aided systems. And I was really going there for telecom management because I had worked for AT&T while I was in school. So, and I used to work a lot with all the tech guys, and these guys were like, like computer I don't know what you call them, man, but I know they were nerds, super nerds, a super genius, and you go in there in the room with them, man, and if you didn't talk the talk, they would eat you alive, and man, they were rough guys to be around. And
True propeller heads.
oh man, oh man, it took me a while to get used to them. I had to get used to them because I was learning what they were saying and doing, and they were willing to teach me, you know, but I would never go up against them because I was helping doing project management, installing like the big switches and the clean rooms and all that. So it got me more and more into that. And then that's how and that's why I got into, my point is that I got into, from telecom, that's how I got into networking. And that's when you had, what was it, Netscape came out. They were like the first ones that came out with the IT and networking.
Was that the late 80s, I think it was? Or
Yeah,
early
it was.
90s?
I believe so. Yeah, early 90s, I think it was. Yeah, and then that's how I got in. And that's when I realized, because it went, for me, it was a big deal because when I used to do studies and go to the library, have to go to New York and different libraries to get books and do research. When I started getting everything, and I tell my son, you don't know how good you have it, because man, having to get up and travel and do all that running around and trying to do research and not finding books, you get to the library and it's not there, somebody took it out, and then you got to go find it somewhere else. And, man,
Stephen, you notice he's talking pre-internet?
Yes.
You're going to libraries.
Oh yeah.
And checking
Oh
out
yeah.
books?
Well, I was born in '86, so you know my
Okay.
house did experience kind of pre-internet.
Okay.
And then, but the earliest computer I had dealings with was a Commodore 64.
Okay. Yeah, you know that. You're the same age as my oldest son.
Oh,
Yeah.
great. Okay.
So my oldest son and you are the same age.
That's funny. Yeah, because the guy in the firm I was in the same building, there was a guy downstairs who did graphics, and he had a Commodore 64, and that's what he was doing all his graphics off of.
Yeah.
Yeah.
And I don't know if I ever told you, when you got Mark, one time I had a book. There's a book on fractals, and it had all kind of fractal designs because I was into art and everything. And it had computer fractals. You had a computer program to do it, and there was this article in there, something about doing graphics, coming to them and doing graphics, because I was getting into, from the CAD, it got me into like VR. You know what I mean? And that's when the first game came out. What was that first game? What was that game? It was a shooting game.
That was virtual reality?
There was an article in it got into all that kind of stuff. And I noticed this company in the back, and they said they would pay for you to go to, it was something about, they wanted you to go to school and learn how to do VR, but you had to go to California to this graphic school. And I said, okay, well, let me call this company and find out. And I said, well, what's the number? I said, well, the website is PIXEL, Pixel. I said, oh, okay. And I called the number, and I said, you know, I'm talking. I said, yeah, I'd like to do that, because there was a school. Actually, there was a school in New York, but somebody bought the whole school, and then it was gone. And you had to go to New York to learn the graphics. Otherwise, I probably would have been doing movies and stuff, doing VR graphics. And the guy on the phone, and I said, I said, well, okay, well, it was nice talking to you. He said, yeah. I said, what's your name again? He said, Steve Jobs. I said, oh, okay, Steve. It was nice talking with you.
That was when he was helping co-found Pixar.
Yes. And I had no clue. No clue whatsoever. That's when, and he was the one who told me to go and he said, you get educated, take the course, you get certified, call me back.
Wow. That's crazy.
That's cool.
Oh,
so
man.
Let's jump back.
But that's when, but my point was that's why I thought I was getting, when things started getting global. Like now, when I said I was learning that with the internet is what made it more global than anything else. Because now you can create wealth and sell and do business anywhere, for anybody. Can
anywhere in the world.
Anywhere.
With anyone.
Yeah. Because I mean, at one time I was saying, okay, well, if you're here in the United States, yeah, we got the internet. So yeah, that's fine. But then when you realize, you said, no, anybody can do it now. So we're not just competing with ourselves here, we're competing with the whole world now.
Yep. I've actually had employees in the Philippines, and I work with them work with them every day.
Right.
you know, as I had a business that employed people there.
Okay.
So yeah, I totally get it. Anyway, jumping back into this, because we got to wrap this up here pretty quick.
Sure.
Let's go to the last page where Ben is talking about the fact that timing is where it's at. This is how they manipulate a lot of things. They manipulate the timing. And he goes into a big section here, the last 2 or 3 paragraphs, where he's talking about how they manipulated the timing with respect to gold, and how that's why, as a fundamental, it no longer works, because you can't tie the price fluctuations of gold to fundamental concepts anymore, and it's being manipulated. And so at a time when right now gold should be spiking, it's not.
Well, do you think Bitcoin has something to do with that? Because I mean,
no, actually, Bitcoin and gold are kind of operating on the same premise now. And in fact, they're now able to manipulate Bitcoin. Bitcoin now has been in a bull market for the last 4 months. And, you know, I think, you know, based on some analysis I'm reading, that Bitcoin and Bitcoin in general as crypto is set for another bull move. But, you know, right now, everybody's bearish on it. So we'll see what happens. But it's been as low as it's ever been for the longest time. But no, I don't think Bitcoin and gold are adversaries in terms of as investments go. But in fact,
I don't mean adversaries. I mean, there's only money. I mean, money can only go so many places.
That's what I'm saying. I don't think, you know, yes, you're right. Money can only go so many places, but I don't think it's as simple as gold versus cryptocurrency and vice versa.
Okay.
And I think what you'll see ultimately when things, if things ever do straighten out timing wise, I think what you'll see is the relationship with Bitcoin will be an inverse relationship with the stock market, much the same way gold is.
Right.
And so maybe their individual cap rates, if you will, may not be as high as they could possibly be, but you'll see them both go up and down at the same time.
Right. Yeah, I think I were saying the same thing. Yeah.
Yeah.
Okay. That's where it would go. Yeah.
Okay.
And I think I know you're gonna make it short, but next time we talk, I want to hit on the point that Stefan had talked about in regards to food, because I think we're having the media isn't even talking about.
Well, let's talk about that. Go for that, Frenchie. Take a moment and talk about it.
Yeah. Well, I mean, because I've heard recently
the
amount of food factories that are. You ever heard these mysterious fires that are happening at all these?
I've heard about that. I'm not that familiar with it, but I have heard rumblings about that.
Yeah.
If you want to elaborate, go right ahead.
Right. Yeah. Well, I'm still learning about it myself, but there are like 10 different food factories that had these mysterious food fires. Well, the person who was saying it was saying that there's somebody who has some kind of mysterious technology or equipment that's causing these fires in these. He said, because how could 10 different, well, he had a whole list, but he said, how could these places just all of a sudden just have food fire, just have fires?
Combust.
Yeah.
Natural combustion.
Right. Just all of a sudden out of nowhere. Mm-hmm. And he said the media is not even talking about it. And he named them. He named all the 10 places that are having these fires, and nobody's talking about it. But I look at it as a point where they're attacking us from one end, they're trying to attack us from another end. So I mean, we're always going to be the target. Obviously, the U.S. is always going to be the target, but they're trying to. But what he was saying, that they're coming at us from different angles, and that's one of them. Especially with the situation with the war in Ukraine, with the grain and all that. And then you have the fertilizer issue. You have that. And then now with the pandemic, with all the supply chain issues, and then now they're going after the factories, the production sites. So, but the media isn't talking about it, which I think they should.
Yeah, I think they should too. But and again, to your point, the reason why they're not is most of these supply chain issues, and I'll lump everything you said, from the food production facilities burning to, you know, the shortages.
Right.
These are all manufactured. there's no real shortage that isn't manufactured in this case, and they're manipulating. It's part of this whole thing. So, we talked about strategic wars to
Yes.
to deal with, which currency we're going to use. The media is covering that up. You've got the supply chain issues, and I'm going to lump everything you just said under supply chain. That's a valid point. I don't think Ben could have seen that one coming,
Right.
because we've not seen the kind of supply chain disruptions that were created. I'm using that word with air quotes, created, during the pandemic and thereafter. It continued, and I find it interesting. My last job before I retired was in supply chain. I was over the supply chain and a number of other responsibilities of a company that was doing some manufacturing here in the US, but we were importing a lot of our raw materials from China and other countries. And all of a sudden our production schedules were disrupted significantly, not only during COVID, but after. And it was all chalked up to supply chain. Well, we found that a lot of that just simply was manipulation. And it's simple because we were able to, our source would dry up in China, say, and we'd just go to Vietnam or to India, and there we had plenty of raw materials to import. And so why did China all of a sudden dry up where, these other countries had it, And so, we were only we were only impacted in a minimal sort of way, I guess is what I want to say. But yet, my eyes were open and I'm going, yeah, I can see it. These are manufactured supply chain shortages.
Right.
And, and so, when you, for example, have a baby formula shortage, and that most of baby formula is made up of whey protein,
Right.
okay, which comes from milk. All right. So why didn't we see a milk shortage? If there's no milk shortage, they had plenty of whey protein. Why couldn't they have produced their formula?
Right.
It was a
And I think
manufactured
You
shortage.
you remind me, that same person also mentioned the fact that he said there was some kind of disease. I don't know if he said there was some kind of chicken disease that was going around.
Yeah, they've done that a couple of times.
Yeah, right. Where they had to kill off a whole bunch of
Yeah,
chickens.
20 million chickens or so. Yeah.
Yeah. I know, right? And you're right. And it mentioned that. I was like, wow, that's crazy. And the thing was, and I know they do it, and I know like you said, they manipulate it. And just to give you an example of that, because I built my own computer. I built two of them. So I had to rebuild and I had to do another one. I needed a new one because I had mine for 10 years. And at that time, that's when COVID came in, and it was almost finished. And the graphics card, which was you normally would get, I think you were paying around $200 or $300, was now $3,000, which was crazy.
Yeah.
And it was hard to find and hard to get. So I had a unit sitting here that I couldn't do anything with, pretty much, for almost a year. It was
Let
crazy.
me jump back into this. I'm going to just read a couple of paragraphs and we'll wrap up with some closing statements.
Sure.
And then we'll call it a night. But
Okay.
Ben writes here, timing is where it's at. Again, I put a note out in the margin. I said, yeah, this is all about gold and silver manipulation. Said timing is where it's at. No one can predict when or how the next crisis will occur. He said, I expect it will occur under coverage of some large war or civil unrest. What have we experienced in the last 3 years?
Right. Civil
First,
unrest.
we had the summer of
Both
love,
those.
right?
Yeah.
Yeah, we had Antifa doing their thing with the summer of love, and we had one particular party that was in total support of it. And then we have the war. We've got Russia, Ukraine going on. We've got China saber rattling with Taiwan. We've got a promise that if China invades Taiwan, we're not the only ones that are going to go to Taiwan's aid. India is a total enemy of China. And I didn't realize this, but India and China, if you look at the geography, they share a border. It goes quite a way.
Yeah, they've been fighting for
And-
a long time. Yeah, they've
Yeah,
been
they're fighting it. They've got skirmishes going on that border all the time.
all the time.
What I really found interesting is India, when they have these border skirmishes with China, they kick China's butt.
Oh yeah,
They kick China's butt every single time. The Chinese don't even get it. They've got a bunch of, one-child namby-pamby wuss boys that go out there and play soldier. And these Indians are just absolute brutal.
Mm.
I mean, I'm glad India is our ally. I really am. I had no idea how powerful their military is.
Yeah.
Wow.
And then when you see these guys go out there, I mean, and they're massacred. They'll have 200 Chinese guys show up and a dozen Indians, and 150 Chinese will die. It's that one-sided. I mean, I don't know. Xi Jinping better wake up and get a clue. He does not want to go to war with India. But here's the point.
Well, yeah,
India
I mean,
has said
it's,
that if China invades Taiwan, India will attack China.
Really?
Australia has said they'll attack China.
They said
Yeah.
it? They actually
Oh
said it?
yeah, they
Oh,
declared
okay.
it.
Oh, okay.
So we're not the only ones defending Taiwan. they've got neighbors in the neighborhood that'll say, China, don't you dare. In fact, I wonder if sometimes China's reticence to actually attack Taiwan is not just because of anything we might threaten in retaliation, but they've got neighbors who are going to retaliate, and they're mean.
well, and but I part of me also suspects that China is patient enough to just wait for the U.S. to implode on itself.
Yeah,
I think
as well.
more than the threat of China, it's really reclaiming values, two-parent households, the kinds of things that actually raise kids properly.
Mhm.
I think that's a significant situation because China is dealing with its own implosion of its population because of its
Yes.
one-child policy. So
They've been in a
they're re-
demographic winter for 25 years.
yeah, they're not in, even an ideal position to just go and swoop in, take Taiwan. At this point in time, and that's kind of the point at this point in time, but it's the single dynasty that's kind of been on the rise more than once, which you can't say for every other empire that's existed. So the democratic process in America is already it's fragile. Democracy is fragile in general, but I think we have a lot really to work on internally, and so I think figuring out a way to produce things is going to be a significant road for us.
Mm-hmm. Yeah. Going on, he says, that the media and the politicians are going to use these things like the wars and the civil unrest to blame things on the market and why they blew up. And when I read that statement, I just had to laugh. I mean, this Ben was just so clear on this. It's like,
this is Ben saying this. This
is Ben saying it.
Wow.
8 years ago, 10 years ago, whenever he wrote this. And here I am thinking, okay, and what is Biden's headlines? He's blaming high gas prices on Putin. He's blaming inflation on Putin. And it's like, Ben, did you see the headlines, in some crystal ball 10 years ago or something? Because, here's this doddering old criminal fool, doing the very thing that Ben was saying that they would do. And so anyway, that, and again, I'm going to refer back to bumper sticker politics, where people put their bumper sticker on and there's their sound bites, and that's what they think will educate people and draw people, toward their way of thinking. But I want to wrap this up with the timing of gold. Okay, here's a story that deals with the timing of gold. He says, let's say you read the prologue of this book in 2011, so that's when he wrote it. He says, I know that the currency of the United States is artificially inflated, and I know that the gold has real intrinsic value. It has for thousands of years. I'm 70 years old. He's putting himself into kind of a scenario. I'm 70 years old. I'm retiring 5 years late, and I'm going to buy gold now because I know the financial markets are messed up, and I'll be safe there. And he goes on to say, but gold bottomed in late 2015. And if you bought gold in 2011 when it seemed prudent, you would have lost a lot of your retirement savings by 2015 of course. Furthermore, gold does not provide any dividend. It doesn't pay you a monthly income to live off of. You can be right. You can say, I recognize the fundamentals, but it's a manipulated market. So now you're 75 years old and the value of your retirement portfolio lost about 40% minus what you had to live on before it generated, minus what you had to withdraw to live off of because it generated no income for you. What do? There's nothing to say. It won't go down for another 10 years or stay for the same for 10 years. You're better off just holding your cash under your mattress, which is a fiat currency with no fundamental value. So what do? Not a simple answer. So in other words, here's gold. It's never gone to zero. It's got intrinsic value. You think it's a safe place to go because it's a fundamental. It's been a fundamental. And now, because of market manipulation, you lose. Okay, and so I guess that's what the whole punchline of tonight's discussion, the whole moral to the fable is that they will use timing and manipulate timing to manipulate you out of the fundamentals or manipulate you so that if you hold on to the fundamentals, you lose. And by discovering what the great distortion is, you might be able to learn something and protect yourself that way. But the final plug is this: it's all about setting up your fund, because now with you setting up and running a fund, if you're doing it successfully, you now get to ride over all of this. All of this no longer affects you the same way because you are doing a service for people in that you're getting them a return that only the very rich can get, and you're able to then support yourself, get rich yourself, shall we say, by doing that. And so I'm just going to give you a teaser for next week and then put this up, and that is in next week's lab, we're going to talk about some of the things that I've learned recently with respect to our funds. I just had a meeting with Ben today, and I think I can safely say this. Ben graduated a couple of us, meaning that he basically said, Mark and the other person that was in the room with us, I've taught you everything I can teach you. Now you got to just go do it. And he was right. And so essentially, and I'll just back this up with one other thing Ben said, and that is he goes, I don't want students. I want colleagues. In other words, he doesn't want people that he can mentor and teach forever and ever and ever. He wants people to go out and do the things that we're learning how to do so that he can work with us as equals, professionally speaking, colleagues. And so the idea is to learn this stuff as quickly as you can, put it into practice, get your funds set up and running, and then work with Ben as a colleague in the industry as opposed to a student. And so it was quite a significant thing for him to tell me today, I can't teach you anymore. I mean, we'll have questions invariably from time to time, but to come away from that meeting recognizing that I have essentially all the tools from the book to the course to the classes that we're conducting to the meetings I've had with Ben, everything is now there in terms of the material to be able to complete what I've set out to complete here. And I'm not saying that to brag on myself as much to say, guys, there is an end. I mean, in all of this, that you will reach a point very soon, because it doesn't take long, that you will know everything you need to know to set up your fund and run it and do it compliantly and do it effectively and be as successful or maybe even more successful than Ben at what you're setting out to do. And so I'm gonna be talking more about that next week in our lab. So make sure you're there, put the word out, make sure you get there, because I'm gonna break some things down to their fundamental parts and show you just how simple and how easy this can be to set up and get it going. And then we're gonna start, I don't know, holding some races to see how quickly people can do different things to move them from step to step to step to get their fund up and running. And in the meantime, I'll be racing you all because I'm going to have my fun.
Appreciate that. Sounds good.
All righty, guys. Anything else you want to add before we say goodnight?
Oh, good to talk with you both, and
Yeah.
look forward to next week.
Yeah, my
Okay.
pleasure. My pleasure. Thank you.
All right, guys. We'll see you on the flip side. Take
All right,
care.
take care.
Bye-bye.